If you struggle to find those areas of supply and demand on your charts, I'm going to share a strategy that's going to actually allow you to simplify that process in less time. So let's head over to those charts and see exactly what this strategy is all about. So I'm on the pound Japanese yen on a monthly time frame, and I want to share with you the use of this line chart trading strategy with a breaker structure, how you can apply it to any single time frame. So first we'll go through this monthly chart, then we'll pop down to daily so you can see how this can be applied throughout any single time frame. So the first thing we need to understand is the traditional way we look at break of structure is we're using the swing highs and lows of those candlesticks. Now when we're using a line chart strategy, pop over to a line chart, we're looking at these swing points on a line chart. Now that's going to show us the closing price, which to me is more accurate than the use of those wicks. The wicks are where you're going to see the manipulation phase. We're going to see the manipulation of previous swing highs and lows and into areas of supply and demand, which you'll see in a moment. So let's take this chart. We're going to look first from this swing high, and we'll go through this price to see how you can apply this break structure line chart trading strategy. So let's just remove that quickly. So the first thing we need to see is the market needs to break down and remove this area here of structure. That's the last swing low where we see the push to the upside. Now it does break it right here. Now what I'm looking for to mark out my area of supply and demand here is I want to see a red candlestick. So we go back to the chart and we can see there is a red candlestick to the downside as we break through. So we now quickly pop back to that line chart. See, this is that swing high. So this is the swing high what breaks through this swing low. So that's the area I'm looking at on the chart. As long as I can see that breakthrough with the red candle, then I can mark out my area here of supply. That's an area of supply that I'm interested in the market to see if price comes back to. Now we can see that's where price is now coming to. Now this is a monthly time frame. So we've got years of data sitting here. So we look at this now and we go back again to the line chart. The market continues to go down. We're looking for the next break structure. Next breaker structure is this move here to downside, taking this swing low. Back to price. Does it break out with red candle? No. So we go back to the area once again. The next breaker structure I'm looking at is going to be this break to downside. Does that break through a red candle? Yes, it does. I can then draw out here an area of supply. Now, looking at the chart, you can see the market does come back into the area of supply. We go all the way back down again. So we had a reaction, and this is how we're going to look at this on the market. Now when we actually start looking at this area, hey traders, we'll get back to the video in just a moment, but I want to give you a gift for hanging out with me today. I want to give you my free trading strategy class and cheat sheet. This trading strategy class and cheat sheet will go through everything you need to know about applying a supply and demand strategy that I personally use to generate profits. But it's more than just a strategy. You're going to have some actionable steps to accelerate your growth with learning how shifting your focus can generate more profits and the steps to building a profitable strategy for yourself. Look, you don't have to spend a lot of time on this. It's about doing the right things in the right order. And it's free as my gift to you. So just go to norfolkfxtrader.system.io free strategy class sign up, or hit the link above now to get your free trading strategy class and cheat sheet. Now back to the video. We have this break here to downside. Do we have, once again, a red candle? No. But what you need to take here is that from this swing low, this swing high is broken to the upside. So once you identify that and go back to the chart, does it break with a green candle? Yes, it does. This now can be my area of demand. So I hope you can see how we're using the combination of the breaker structure with that line chart, and then we're marking out our areas of supply and demand. Now we go back again to the line chart, and we can identify the market goes up, pulls back, and we break out to the upside here. So this is a very minor break. Perhaps this is a better break. Does it break with a green candle? We do break there with a green candle. So you can mark this out as an area of demand. And we can identify the market after the close of this bearish candle we do actually wick back into this area of demand, and then we push up to that supply. So if you were looking for a trade here, perhaps on a daily, you could have caught a trade here off a daily and held it all the way back up to that supply zone on a monthly. Now, this is using multiple time frame analysis, and it's important that you use that multiple time frame analysis when you're looking for those entries and targets. So going back to the line chart, we can identify we have another break of structure to the upside here. And yes, we have another green candle. So this actually is another area of demand. Now, when the market does come into this area of supply, you've actually got limited room to trade back to, because we've got a demand zone sitting below. Now, we do have a reaction off that demand zone. Then we have a lower high here and we continue to break down. So let's see what happened. We have supply control to this area. We then have demand in control here. But now we go back to the line chart and we'll use this level. We go up, we need to break this low. Basically, this is my low I need to see broken. That is broken here to the downside. If I then go back to price, it's not broken with red candle. The only red candle we see on the way down broken is this one here. That area of supply is the area that goes down and breaks. Go back to the line chart and you'll see that this break comes from this swing high. And on the way down to break it, that's the only red candle we have. So that is the area of supply. We pull back into that supply, we drop through. Okay, we wick through to removing this area of demand. Okay, we then also remove this area of demand on the way down into this demand zone. This is where, now this is the origin of the pullback. This is a great area to look for a trade back out. But again, we're looking for those breaks of structure. Another break to downside. We're back to price. Yes, we broke out with a red candle. This then gives me a new area here of supply. Now look at the way the zones are starting to stack on each other. And the zones are starting to get smaller and closer together. This indicates that potential reversal is coming. If we now go back to price, yes, this is in hindsight because we can see on the chart we do go back up. So again, the next area to break is this very small basing area. If we look back in the chart, you can see how the market makes this drop, base drop. It does leave an area on a red candlestick, but it's not an area of supply I want to draw. It's a drop base drop zone of supply, but I want to see those origin moves with a swing high. It hasn't got a swing high, so I'm not going to take that as an area of supply. The market does come back into this supply. Okay, we have a reaction. We go back. Let's go back to the line chart. The candles. See, we come into this area of supply. We have that reversal. We push back through, take this swing low. And again, the next area we want to see broken was going to be this high. And that is broken over here. So mark this out. We don't actually reverse until we break through there. We go back to price. We break through with a green candle. So from here, I can mark out a new area of demand. And what that actually shows me now is that we remove this area of supply. Okay, it shows me that demand is now in control. We had demand zone held. We've broken through, removed an area of supply, left a new area of demand. Demand is in control. I'm not expecting these areas now to hold. If we go back to the line chart, we can then look at what happens here. We have a small breakout here. Back. This small breakout, we go back to price. You can see that removes this area of supply. Okay, so we have a breakout. Is there a green candle? No. So we go back again to the line chart. We look for the next breakout. The next breakout is going to be this level. Very small breakout, not a great breakout. This is my breakout level. Okay, so this is my swing low. There's my breakout. Looking for that green candle. There's your green candle. So this is my swing low. So potentially this would be your low of the zone. This would be my area of demand. Go back to the chart. We can see the market actually goes up, comes into the area once, pushes up, comes deeper into the zone, pushes up again here. You can see we have another break structure here to the upside. Okay, with this break here, pull back, breakout. We go back to price. Is there a green candle? No, there's no green candle here. So back to the area, we pull deeper. We have another breakout to the upside. Guess what? We've already done. We've removed this area of supply, by the way. And now we can see demand is in control. Remember I said here, we knew demand was in control at this point. The only area of supply really you want to be looking at this point is this area of supply, which is in control. This is the origin of the move. This is the only supply zone really I'm interested in taking a sell from if we have a reaction. So we can see here the market breaks out. Okay, break structure here to the upside. And again, what do we break out with? The green candle. So we have even here another area of demand I can draw. And looking at price, we can identify that demand is in control. Now I did say you can apply this to lower time frames as well. So we now just go down to a lower time frame here, go to a daily time frame. We'll leave this area of demand. Let's remove these other zones down here. Don't need these zones. We'll remove this one as well. And we'll look at, just leave this one and this one on the chart. We'll go down to daily. Let's have a look at current price. So we can identify down here. In fact, let's just remove this area of demand. Let's do the same thing. Let's read price. So once again, we can identify, go back to the line chart. The market, again, comes up, breaks this structure. We break to downside. We then continue down, we pull back, we break structure head to downside, we pull back again, lower high. And we need to break this high. We don't, we go back, we break structure to the downside again. So now we need to see the market breaking this high to show me a reversal, new area of demand. And we go to the price chart, we break up with a green candle. We do leave as well down here the origin of that move, area of demand, green candle, price pulls back in. Again, I know this is in hindsight, but go away, apply this strategy to your charts. See how it can improve accuracy. Go back to the line chart once again. Market comes in here we can go down to lower time frame, do the same thing again. You'll find that trend reversal, understanding those areas of supply and demand. So the market goes up, we need to see a break of this high. This is the pullback, we break out. This is the origin. Okay, this is the breakout area. So we've got two areas we can look at. We go to the area, we have new area here on a green candle. We do have an area here. So I can mark out this as my area of demand. Market comes back in. We go back to the line chart again. Smaller area, breakout. Do we break out a green candle? Yes, we do. We have an area of demand. Does the market come back? Yes, it comes back into demand zone and we rally back up. Now the market here is actually going back up into this area. We wick it, and we close through, and we'll go to that in a moment, what's happening. But we can identify, now look at the chart, we have another breakout. So it's easy to see, using this strategy, that we're in control of the demand. We're only looking for buys. We go back to price. Yes, we break out again with a green candle. Now this, again, is where we're going to find a losing trade. The market comes down, we wick through, we had a loss. In fact, all this area now removes all these demand zones. But do you see a red candle in there? No. So is there an area of supply? No. Where's your first area of supply you can draw? We go back to price. We'll break here to downside. Okay, red candle. There is my area of supply. That's the supply zone. You can see we test it, we have a reaction, pull back, and we break it to the upside. So you guessed it. What happened here, we had a new area of demand created as we broke supply. You're always going to find an area of demand will remove a supply. So when you start applying the break structure with the line chart trading strategy, you're going to find it's a lot easier, much more accuracy in your trading as well. So again, on the way up here, we go back to the line chart. You can see we have a break structure here to the upside. So just we saw here, we have this high. We have a break structure. Back to the chart. We don't break out until here with a green candle. So we can mark out here an area of demand. Let's just remove these ones, what were removed. And once again, we go back to the line chart. You can see that area is this breakout to the upside. Okay, we did have this area here breaks the upside, so you could actually draw an area of demand. You just find that area. This will be area of demand that we can draw. Again, we can see demands is in control. All demand zone is in control. We break this area here of supply, break up, new area of demand, move sideways. We can just do the same thing again. Look, we're looking for those breakouts. We break out here. This is your high, pull back. Now there is a way to look for trade here. There's a manipulation I was talking about at the beginning of this video. This is a wick manipulation. Wick through, there's reversal, and there's a way to trade this type of trading. And this is all coming into this area here, this green candle. That's where we see the removal. We don't always come back to demand zone. But looking here, we have a breakout again with a green candle, that area on the breakout. We have a new area of demand. Once again, demand is in control. And again, you do the same thing. We have small areas here breaking up. And quickly look, I can see and identify very quickly here. We have an area of demand here. We retest it. We then have another area of demand here. Another breakout. Once you start to see the chart, you're going to be able to find these zones quickly. You can see demand zone, demand zone, demand zone. This is easy to see once you start reading price. Then when you go back to line chart, you can see all these small breakouts, what are happening. Another small breakout there as well. New area of demand once again is right there in the market. And this is all you're seeing in the market. We're seeing strength now coming in. The market's going up. If we now go back to line chart, we have a breakout there. Was there a breakout green candle? No, we don't draw any more areas of demand. So what you can now identify is that all the way up here, demand has been in control. Not once have we seen supply come in. And where's the market now coming into? An area of supply on the monthly. So what are we expecting to see on this market? Right now on the daily time frame, on the pound Japanese yen, we're looking for the market to pull back. Now it's not going to come all the way back to this demand zone because we've got areas here on the way up on those green candles. But what we're definitely going to see happen in this market is if it's going to reverse out of this area of supply, we're going to see it come back for this swing low first. Now that is where I'm expecting to see the market go. At least take this swing low if we come out of this area of supply. Now if we do look back on the daily, let's look back here. We know we've got the monthly area of supply. This is where you can use multiple time frame analysis in your trading. We can now see using this area of this technique of the break of structure line chart trading strategy, we can identify we have a break here to downside. That break of structure, mark it out for you. Break structure to downside. Do we have a red candle? Yes. Can we mark out an area of supply here? Yes, we can mark out an area of supply here. Now this area of supply is just there, I believe. Then we look back to the line chart. Once again, another small breakout right there. And we have another red candle. I can mark out another area here of supply. And finally, I also can see here another zone of supply that I can draw all inside this area on the monthly. Now, if you go back to price, we know that price is inside this area of supply right now. You can see it's inside that supply zone right now. Now push up into the larger zone on that monthly would be better inside this area, which is nested inside. But using the break structure with the line chart is going to give you more accuracy on determining that direction in the market, seeing whether demand is in control or supply is in control. Now, this is a great way to improve your accuracy going forward in your own trading. But if you're interested in learning more about the supply and demand strategy that I use to generate profits, then check out streaming your free trading strategy class right now.